Welcome back. We may now be underway with what is being called the Bitcoin breakdown, with many of the Bitcoin narratives and the Bitcoin cycle potentially coming to an end. And we've been discussing this right on this channel for quite a while, especially with this chart, the breakdown of the psychology of markets. This gives you a little bit of insight into where we are potentially in the cycle. Personally, I believe that we are in the euphoria and complacency phase, meaning we are towards the end stages of the bull market. But if you don't believe me, well, maybe you got to listen to Jim Cramer himself. And we know there's the reverse Cramer index. And this is where we're going to be starting today's video. In today's video, we're going to be exploring all of the Bitcoin treasury companies. What is going on in the crypto space? Where are we in the cycle? What are the indicators of where we are in the cycle? And hopefully this will set everybody up to make good financial decisions in their investment thesis and portfolio, because we know that markets don't go straight up and they don't go straight down, and they typically don't stay sideways trading for long periods of time either. And so where is the market going? Let's discuss it, and let's hear from Jim Cramer. But before we do, make sure you guys are subscribed to the channel. We upload every single day of the year to bring you the latest happening in the financial world completely for free. So all you got to do is give the video a thumbs up if you want to help support the channel for as little as $1.99 a month. Click the join button down below to learn more about becoming a channel member. But the most important thing is giving this video a thumbs up. Let's listen to what Jim Cramer said just this past week about Bitcoin.
It's not about Bitcoin. Well, Bitcoin, you can put it in the speculation basket, but at the same time, how many companies, we're just going over these numbers, are raising money to buy Bitcoin?
Well,
it's enormous.
I was
in
offered
fact,
a chance to do it. I said,
far
I
more
work
than
for
has been
CBC.
raised by companies going public.
It's because it's almost encouraged. I mean, the SEC chief is like, yeah,
Well,
good
yeah,
work.
this is a very crypto-positive administration, no doubt about that.
Well,
That's
it's
been a
like-
real positive
I
for
know,
all of the
for them to
different.
say, and it's also a great hedge against the budget deficit,
Well, it may be seen
which
as
is
that.
what it is.
Michael
I mean,
Saylor would say that, right? Store of value.
I was with someone whose son took his paycheck and bought Bitcoin. I started a job, a good job, 5 years ago, and now it doesn't really have to work. And he's totally hedged. The kids hedge. Father has to work. I'm not kidding. The kids hedge. Look, I mean, this is happening. We don't want to talk about it, or maybe we think it's FIMOR. Maybe it's FIMOR 23.
Well, I mean, it's not often you create a new asset class and then write the regs around it in real time at the same time. That's different.
But here's the deal, guys. This has been going on for years, right? And the old legacy traditional financial ecosystem, which is what CNBC is, it is what Jim Cramer is, it is what Wall Street is, they have been fighting tooth and nail against crypto, against blockchain, against the proliferation of these cryptocurrencies. And so now that we're seeing the complete opposite going on, is this really bullish? Is it bullish that we're seeing company after company saying they're going to raise money? We're seeing companies around the world that literally have like they're a pet store and we're going to buy 15 Bitcoin. It's like, okay, why are you telling us that? Nobody does this with any other investment, but we are seeing it happening in live real time as the regulations and as the country is becoming more and more crypto, I guess you could call it crypto friendly. But there are signals that the bull market is coming to an end. And I keep bringing up more and more and more of these signals. And there are still people that say, Cryptoviser, you are just a bear. We are going much, much higher. Well, we just got this long anticipated digital asset group report from the White House. And a lot of people were expecting this to show how many Bitcoin were the government held, where the strategic reserve is, and none of that was in the crypto report, right? Almost like a rug pull of the crypto ecosystem itself. Well, first of all, we already found out that the government has already sold most of the Bitcoin, which they said they were going to do in 2024, and now we're in 2025, and people are like, wait, why'd the government sell the Bitcoin? Because they said they were going to sell it. Like, what did you guys think? Gary Gensler was just pretending that they were going to sell the Bitcoin? No, they said they were going to sell the Bitcoin and they did sell it. Now we're finding out that they don't have the Bitcoin that they supposedly had, but it doesn't matter because these Bitcoin treasury companies are accumulating Bitcoin on behalf of the US, on behalf of BlackRock, Vanguard, State Street, and many of you Americans as well. So effectively they are accumulating Bitcoin, just not in the way many people believe. But anyway, this reporter asked Bo Hines, who is the White House, I guess you could call him I think the digital asset liaison or something like that. But essentially, they asked him about this question, right? And to me, not a surprise that nothing about Bitcoin strategic reserve was in there, nothing about how many Bitcoin the government owned was in there, because that would actually be bearish for the market. I mean, there's a potential, just seeing the report that the US doesn't have 200,000 Bitcoin could potentially push the price down significantly. And I don't think that the market wants that or can handle it. And by the way, this came out the same day that the Federal Reserve made their rate cut slash not rate cut decision. But let's first listen to the White House director in crypto about what this whole Bitcoin strategic reserve is, because remember, a lot of the bullishness that we saw in the beginning of 2025, end of 2024, was kind of leading up to this whole, what we call the Trump pump, right? This major move after the election, because the belief was that there would be a strategic reserve. Now, I'm not saying there's not going to be, but it's taken a lot longer than most people anticipate. And that could be a rug pull for this cycle. Let's listen in.
I would love to know what's the update on a potential Bitcoin strategic reserve.
Well, look, we have it. It's been established through executive order in the SBR. We also have the strategic national stockpile. The digital assets national stockpile. I think that, one, we wanted to recognize Bitcoin for being unique, and we talk about what that looks like and kind of the threshold that Bitcoin has created. It's in a class of its own, and everyone recognizes that. But we also wanted to give credence to the work and the development that's happening across other ecosystems, and that's why we have this national stockpile alongside. This actually requires some labor to get this set up properly. You have to build the infrastructure. You have to make sure that you're crossing your T's and dotting your I's to get this done the right way and have long-term success with it. But I've said ad nauseum, we do believe in accumulation, obviously in budget neutral ways, as the president's outlined, but there are countless ways that we can engage in that. We'll act on those that can be most expeditiously implemented, and I think that people will be very pleased with the direction that we go in, and we'll start moving on that in short order. But obviously in this report, if you read the first Digital Assets EO, we're tasked with creating a clear and robust regulatory framework, and so that's what we focus on here. We understand the importance of the Strategic Bitcoin Reserve. We're enormous fans of Bitcoin and the Bitcoin community, and we want to deliver for them as well, and I'm certain that we will.
How much Bitcoin does the federal government have?
I can't discuss that right now.
Come on, give us a ballpark.
I can't.
Is it going to be made public?
There are several reasons in which we're not disclosing that at this time. There might be a time in which we do. But what I will say is, we want as much as we can possibly get.
So let's break this down, right? There's many reasons, doesn't list any of the reasons. Guys, the reason is because the government doesn't have as much Bitcoin as they believed that they had. And this is a breakdown of the narrative. This is just one piece of the breakdown of the narrative in the Bitcoin markets going on right now. And so you need to be able to, as an investor, be able to identify, whoa, that's a rug pull. Now, it's not saying that the U.S. is not going to ever accumulate Bitcoin. I mean, there's a big potential that they're going to say, no, we're buying back the Bitcoin that the previous administration sold, and it is going to be budget neutral because all of that money shouldn't have been liquidated. And so there's a potential that we'll get back to that 200,000 Bitcoin straight up just by the U.S. government repurchasing that Bitcoin. Especially they did it at the end of the administration, probably as a screw you to the whole crypto community, especially understanding what the President Trump was stating that he was going to do for crypto. So it's possible, but again, when, right? Highly likely not right now. And what we're also seeing is the narrative about the economy starting to break down as well. Federal Reserve had just left rates unchanged, defying the president's demands for aggressive cuts. And this goes in line with what I have been explaining to my viewers. And by the way, at this Federal Reserve meeting in the end of July, early August, we're not going to be hearing again from the Federal Reserve until September 17th, which is well over a month away, right? A month and a half. And a lot can happen in the markets in a month and a half. But what's interesting about the Federal Reserve at this meeting was they did not really tell. Typically, what the Federal Reserve does is they tell us what they're going to do before they do it. So they'll say, it's highly likely we're going to cut rates next meeting, or we're discussing potentially cutting rates next meeting. They didn't discuss any of that. And they kept talking about the economy, the unemployment rate, and inflation. But meanwhile, if we actually look at the unemployment rate, according to the BLS's own website, Bureau of Labor Statistics, obviously, you can see huge jump back in 2020. But before that huge jump at the beginning of the pandemic, we were at about 3.6 to 4% inflation. And where you can see us today in June of 2025 is 4.1% inflation. And so that means that we're higher inflation than where we were right before the pandemic beginning. And you can see here that from, well, let's just say January of 2020, it was 3.6%. February of 2020, it was 3.5%. March, it shot up to 4.4%. And then obviously we had the economic shutdown, and then unemployment just went through the roof. But we are kind of seeing a little bit of a rise in unemployment. And we have seen throughout the entire year tens of thousands, if not hundreds of thousands of people getting laid off of different companies, a lot of tech firms as well, especially as AI is being implemented in a lot of these businesses. And this is effectively making the need for as many employees or as many departments to kind of diminish, I guess you could say. And again, this goes into understanding, like I actually was talking to somebody a few days ago about they're in a field that I personally believe can be taken over by AI tomorrow. I think they already have the technology. I think they're already using the technology. But I think that they're not pushing full into the technology because, you know, they don't want the uproar of, oh, we have no employees anymore. But what this person who works in that industry hasn't been working and is working less over the last, let's say, 3 or 4 years than they did prior. And I believe a lot of that is because of AI implementation. And the person is completely opposed to that thesis or that theory. You know, I've asked them, you know, why are you out of work right now? Like, why are they not hiring people or using the labor? And they said, oh, you know, it's just a cool down period. You know, they're resetting, they're restructuring and all this. I'm like, but they do this every year. To me, it seems that it's a slow drain. And the people in these industries that are somewhat being replaced by AI, they don't even realize it, right? I mean, go talk to an accountant and say to them, oh, do you think that you're still going to have a job that is as robustly paying as you are now? And they'll, oh, yeah, no problem. Not realizing that the answer is probably no. And so this unemployment number can go up substantially, very, very rapidly. And potentially it will, because this is what the Federal Reserve is looking for, to then go and lower rates. But again, we are higher than where we were before the economic shutdown. And so I don't know kind of how that lays in with everything else going on, but it's something to keep in mind because, again, it's a narrative breakdown. Everybody has been anticipating the Federal Reserve is going to cut rates, and the Federal Reserve is not cutting rates and not even giving any indication that they are going to cut rates. And personally, I think this is all just setting up for the next Federal Reserve chairman. And so that could go into May of next year. And I think the rest of the market is just still in euphoria. And again, another indicator, red flag of where we are in the cycle. And that brings us to Raoul Pal. He says, weirdly, the higher interest rates stay, the more they have to inject via liquidity to finance the debt, the higher the assets go. The everything code. And this is just an example of the bulls in the crypto market right now, right? It doesn't matter whether the Federal Reserve cuts rates or doesn't cut rates. It's bullish. It doesn't matter whether companies are buying Bitcoin or not buying Bitcoin. It's bullish. It doesn't matter if 80,000 Bitcoin are going on the open market. It's bullish. Everything is bullish. There is no bearish sentiment at all. Well, that's probably the biggest red flag that you could possibly see in the market, right? That is literally the complacency phase. Like, oh, no, we're never going to dip. Cryptoviser, you're an idiot. For you to think that crypto is going to dip, it's like, I mean, the historical data show it's going to dip. All of these red flags we're talking about show it's going to dip. And I'm not saying it's going to dip forever, but this is the opportunity, right? Top of the market, you sell. Bottom of the market, you buy low, sell high. There's a lot of people in this market that are like, no, Cryptoviser, we should be buying at $120,000. What are you talking about? It's like, you go and do that. We're not on this channel. We are not doing that. Meanwhile, to further show this kind of breakdown of what is going on in crypto, and also watch what they do, not what they say. Coinbase's tie-up with JP Morgan is a huge adoption unlock for crypto, according to analysts. what in the world is going on here? Well, we have now heard that Coinbase and JP Morgan have inked a partnership. Basically, according to this partnership, Chase customers will be able to directly link their bank accounts to the US crypto exchange. By the way, it's already being done, guys. Whether you go into their application and link it directly or you don't, it doesn't matter. Do you know why? Because Coinbase's bank is JP Morgan. And so we've heard from Jamie Dimon, the CEO of Chase, for years, calling Bitcoin a fraud and a Ponzi scheme. Meanwhile, they were the only bank that would bank Coinbase and Gemini. Why? In my personal view, and I've said this for years, it's because they want to see the flows. Meaning, your bank is already linked. Meaning, if you use Coinbase or Gemini, and probably some of the other major crypto exchanges here in the US, Jamie Dimon already knows how much money you have, how much money you're putting into crypto, how much money you're taking out of crypto, and everybody else is doing it as well. And so if you think that the bank is there just for your, oh, we're here to protect your money. No, they're there to make money, right? He just sold something like $350 million in JP Morgan stock or something like that over the last couple of years. They're there to make money and make profit. And if they could do it, even if they think that it's a scam and you want to keep buying into the scam, they're going to let you do it. They're going to let you do it. And so again, we're now at the top of the cycle where the bank that is the most bearish on Bitcoin is like, yeah, you want to buy Bitcoin? We're going to let you do it. And we're going to let you do it with our points. Because again, they think that crypto has no value. But at some point, I do think, and there's a lot of maximalists in the community that believe this, that JP Morgan needs to retract their statements about Bitcoin. Because otherwise, if he really does believe that Bitcoin is a fraud and a Ponzi scheme, and he's allowing his customers to interact with it, doesn't that mean that JP Morgan is a participant in fleecing customers? So they would have to retract their statement, right? They're making a lot of money off of this, right? While telling the older generation specifically, right, the boomer generation, no, don't buy into crypto. Don't keep your money in cash, keep your money in real estate and stocks, because they know, and they're starting to see that the boomer generation is starting to kind of pass on their inheritance to the next generation. And the next generation is liquidating all of this, all the stocks, all the real estate, and they're putting it into crypto. Maybe not fully into crypto, but they're probably putting more into crypto than they are in the stock market, right? Let's listen to what he said back, I think this is 2023 or 2024, in a Bloomberg interview, the CEO of JP Morgan Chase.
Crypto.
If you mean crypto like Bitcoin, I've always said it's a fraud.
No hope for it.
Well, if they think they're a currency, there's no hope for it. It's a Ponzi scheme. It's a public, decentralized Ponzi.
Crypto.
So that's what his belief was, and is probably still. And now they're doing a partnership with Coinbase, and everybody's cheering it on. And you know what all this does? Is it just makes JP Morgan look better. And make it seem like, oh yeah, now they're they think that it's safe for you as a customer to get into it. No. They just want your money. Like, that's pretty much it, in my view. But again, this is another top indicator. When people are switching or companies are switching their entire thesis on an industry, top of the market. Because it seems like they're just trying to capitalize, right, on all the money that's coming in. And they don't care if it's a scam, because they still make their money on the transaction fees. That's really it. Now, if we look at what these treasury companies are doing, and we look at charts, and we look at what the maximalists are doing, we can get also another indicator of where we are in the cycle. And by the way, where we are in this video is it's time to make sure you guys click that thumbs up button down below. If you haven't, do so, please. It's free to do. It takes half a second, and it lets me know you guys enjoy this content. But as we covered recently, Willy Woo, who is a well-known Bitcoin maximalist, who recently sold most, if not all, of his Bitcoin, okay, much to the chagrin of the Bitcoin maximalists. They were in denial. They're like, Willy Woo didn't sell his Bitcoin, and then he wrote on X that he did sell his Bitcoin, and they were like, Well, there's probably reasons why he did it. And it's like, guys, it just means that we're at the top of the market. It's not that big of a deal. Anyway, Willie Woo said the trend line breakdown, often in trading patterns, there's a bounce and a retest of the trend line before it really goes south. He said, my working thesis is that they're lowering the MNAVs via ATMs in preparation for a cycle top in the coming quarters. It's not his first bear market anymore. And basically, he's talking about this chart, which is MicroStrategy versus IBIT. So MicroStrategy versus the Bitcoin ETF, right? And so this kind of gives you, it's almost the same kind of chart as MicroStrategy versus Bitcoin, right? But you can see that this trend line, there's a breakdown here. And this is MicroStrategy specifically to Bitcoin, okay? Now, we know MicroStrategy has a premium, right? When I'm recording this video, MicroStrategy price is $405. The premium is basically 71% higher than where it should be based on the Bitcoin that's underlying. Now, as I've explained, this will compress as we enter a bear market. It's already compressing, right? Just a few weeks ago, this was 1.9. It should be at 1, meaning the stock price is equal to their Bitcoin holdings. Their market caps are almost the same. Maybe there'll be a little bit of a premium. But when there's this much of a premium, and we know MicroStrategy needs to raise money to keep buying Bitcoin, because that's their thesis right now. They have to keep buying, and they have to keep buying ever increasing amounts. They cannot slow down, because the minute they slow down, the whole thesis is over. And by the way, they just bought $2.5 billion worth of Bitcoin through a new debt instrument called Stretch. And people are freaking out. They're like, wow, they just bought this. It's like 3 days before they bought this, 80,000 Bitcoin were dumped on the market. And so the market said, wow, MicroStrategy bought 20,000. You see, it was a little tiny dip. And it's like somebody like myself, who's a little bit more cautious in the market, where we are in the cycle based on days since the halving. I'm looking at this and saying, whoa, MicroStrategy was able to raise $2.5 billion. Good for them. But they also were only able to raise $2.5 billion. 80,000 Bitcoin put on the market, they bought 25% of that. So where's the rest of the 75% of the Bitcoin that was sold? I paused because probably somebody was going to say, right, if they're driving in their car listening to this or whatever, they're going to say, well, Cryptoviser, the other Bitcoin companies bought it. It's like, no, they didn't, because they would have announced it. And so we have a puff of air holding the market up, a puff of air. It's literally what it is. We're testing this trend line, and we already broke down on this trend line. And again, I am not a chartist, but you use charts to help you understand where we are, and as a piece of your investment thesis, and not the whole thing. And so going in line with what I've been saying is there's going to be a rotation once people start to realize this. Now, we on this channel have been realizing this for 2 months already. Many of you probably are starting to come around now. There's going to be a lot of people that don't come around until we've retested that trend line right here and broke down again from it. And then they'll say, oh, well, maybe this is the dip to buy. No, it's not, right? And we could go up much higher, but everything is starting to break down. No strategic reserve, no Bitcoin quantity from the government. Jim Cramer is bullish. The Federal Reserve is not cutting, even though everybody believes that they're going to. It has to happen. We've been hearing this for over a year now. And it's just not happening the way that people want. And so this goes to the thesis as well, that when the market wants something, typically the opposite will occur, at least for a period of time. I mean, eventually the Fed is going to cut rates. But again, we don't drop in the market when people think we're going to drop in the market. We drop in the market when everyone thinks we're going higher. And we go higher in the market when everyone thinks we're going lower. It's a counter thesis kind of thing. And so I would agree here that I believe that what we are seeing and we will continue to see is a suppression or a compression of the MNAV of all these Bitcoin treasury companies. Because for MicroStrategy to keep this thesis, they have to keep buying. And so if we are rotating into a bear market, they're going to try to prolong it as long as possible. And they have a 75% gap here from where the price is to where the price should be. at a very basic level, right, of an MNAV. And so this tells me MicroStrategy will continue to sell shares on the open market until this MNAV is either at 1 or below 1. And they will do this in a downtrending market. Because as we went above $400, this seems to be the cap for MicroStrategy. I mean, every time we see it go above 400, there's very little support. And some of that could be because MicroStrategy is selling on the open market, or some of that could be because there's fear that they're going to sell on the open market. Because right now, from what I am seeing, nobody's really buying MicroStrategy. People are buying Stride, Strife, and Stretch, all their debt products. But they're not buying MicroStrategy anymore. Even the insiders, even the executives at the company, they're not buying MicroStrategy. They're buying the debt products. And so when the debt products, when the derivative, right, because the debt product is a derivative, effectively, of MicroStrategy, when the derivative is now dictating the course of action for the entire company and the stock, this is a disconnect. And usually when there's disconnects, it's not good, because it's due for a massive correction, massive. And by the way, if Bitcoin price starts to go down and they're selling shares in the open market and they're compressing the MNAV, look out below, look out below. Meanwhile, we're now also hearing from Bitcoin maximalists like Peter McCormack that he believes that everything is changing in crypto, right? And Max Kaiser, who's a well-known Bitcoin maximalist, right? Bitcoin maximalist, you get it? Anyway, he said, I think this is fundamentally misses the point of Bitcoin. Bitcoin fulfills humans' most desired satisfaction of traveling through time and space, interacting with other humans per our shared universal aesthetic. The path towards this singularity is happening now. And he specifically talks in this clip about these Bitcoin treasury companies. And he says, will we end up rich and depressed with Bitcoin? Let's listen to what he says here. Again, Bitcoin maximalist Peter McCormack, and also a former host of What Bitcoin Did podcast, which I believe has now retired, as they basically interviewed everybody and kind of really documented the whole path from Bitcoin's inception to where we are today. Let's listen to what Peter says. And don't forget to give this video an absolutely free thumbs up, and also check out my other videos, because if you watch my videos, you're going to be up to date on everything that's happening in the market. And we have a lot more to cover in today's video. We're going to be talking about the Ethereum companies buying NFTs, and more. Let's listen in.
I don't actually like the term Bitcoin fixes things. I think people fix things, and people with Bitcoin can fix things, but it requires people to go out there and do that. If you've made FU money, I believe you should get out there and do something with it. And and I see a lot of people have made their money and they're kind of drifting into the shadows a little bit, trying to kind of park themselves away from the limelight. And I think we should be doing the opposite. And so I think well, that's what I've been doing. I've been trying to fix a community, a lot of problems we've had in Bedford.
And just to give you guys some insight, number one, I agree with what Peter is saying here, that as you make more, you have to do more, right? A lot of people look at it like, oh, well, if I get rich, I'll just quit my job and go sit on a beach all day for the rest of my life. Like, you could do that, but you're probably going to be very bored, right? You need to do something that's fulfilling and also give back, right? And that's one of the things, whether you're crypto trading or stock trading or winning the lottery, like if you're doing well, you have to give back and try to do something. One of the things that Peter has done is he purchased I think a soccer league. He's also hired private security for, I think that's what he's talking about here with Bedford, to patrol the streets at night and kind of help make the community feel safer. And so these are just small things that he's doing. You know, now that Wall Street and the big money are starting to pick up, where the early believers in Bitcoin kind of left off. It's kind of like passing the baton to the next generation. But I do agree, right? You have to have a plan. And this is what we talk about on this channel, especially with the trading aspect, right? You have to have a thesis and a strategy and a plan. What am I going to do if the price goes higher? What am I going to do if the price goes lower? What am I going to do with altcoins, with NFTs, with these Bitcoin treasury companies and all of this? If you don't have a plan, you're never going to be able to follow through on that plan. And then you'll just have all of this Bitcoin or money, and there's nothing to do with it, right? This is the same thing that we talk about with MicroStrategy. Like, what is their plan for buying all this Bitcoin? They're just going to hold the Bitcoin. This is not productive. And this is also a reason that we're starting to see the Bitcoin thesis starting to break down. Because with Ethereum and a lot of these other ecosystems, you can actually do stuff with the coins, right? You're building the DeFi ecosystem. You're building the borrowing and lending ecosystem, collateralized loan ecosystem. Really a new world of finance, where with Bitcoin, you're just holding it. There's no activity. It's non-productive money. This is a big issue for Bitcoin right now, because this narrative that people are going to be paying for things with Bitcoin is actually collapsing with all of these large corporations just buying large quantities and not doing anything with it. And that includes Jack Mallers' company, right? And by the way, guys, their job is to be bullish, right? That's their whole thesis of the company. And when people are blindly listening to that, it creates issues, because Michael Saylor said there's never going to be a bear market again. It's like, well, you also told us that Amazon and Google and all these major companies were going to buy Bitcoin, and none of them have. It's all just the Bitcoin maxis starting their own companies, like Jack Mallers, Anthony Pompliano. But meanwhile, Jack Mallers explains how companies buying Bitcoin will drive the price to $150,000 and beyond. But let's listen to if he says whether that's going to happen this cycle. Hint, it's not. Let's listen in.
Buy as much Bitcoin as you can and hold it for as long as possible and never sell it?
That's one of the goals, yes. But I think what makes us different than a lot of these other businesses is we plan to build Bitcoin products as well. I mean, the founding group is Tether and myself. I founded and lead Strike, is one of the bigger Bitcoin financial services firms in the world. Tether, obviously, is one of the most impressive companies in the history of humanity, but specifically in building massive cash flows within the space. So Paulo and I, before we were CEOs, we were engineers. We built a lot of products. And so we plan to not only acquire as much Bitcoin as possible, raising capital in all sorts of deep capital pools, but also build products, build technology, build tools. I think when people eventually think of 21, it's, are they a competitor to Coinbase? Are they a competitor to Strategy? For us, why not both? We think we have that potential.
Do you envision a future where Bitcoin treasury companies such as Strategy, Mara, and you guys end up buying so much Bitcoin that there really isn't actually much left out there on the open market for people to trade? After all, it is a fixed number of Bitcoin, so no more will be created once it reaches that number.
Right. You know, what's fascinating about the asset, and it's not intuitive because it's so rare, is that, to your point, it is definitively scarce. So if everyone in the world wanted an iPhone, Apple could make more. If everyone in the world wanted a McDonald's cheeseburger, McDonald's could make more. The fact that Bitcoin cannot increase its supply means the new supply comes from the market. If you want more Bitcoin, you don't go to the Bitcoin factory to get one. You have to go up in price. Is there enough Bitcoin for me at 120,000? No. Okay, 130, 140, 150. So I tell you what, there's always Bitcoin available. Just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just going to have to go get it at a higher price.
Okay, fair enough. But the thing is, we go right back to the question of what are they going to actually build, right? These companies have already built things. Why are they not building right now? All they're doing is buying Bitcoin. And this goes back to Peter McCormack, who's talking about what these Bitcoin treasury companies are doing with all this Bitcoin. Are we just going to be rich and depressed? Let's continue listening to what Peter says about this whole situation.
I think more people should be doing that. There's this scenario with Bitcoin that Thomas Pakia from PubKey talks about. He said he sees a scenario where we all end up rich and depressed. And I understand the sentiment. What he's trying to say is that Bitcoin doesn't deliver on the goals we all talked about, which is financial freedom for everybody. And really, you just get all the centralized Bitcoin in these Bitcoin treasuries, and a lot of people get really rich and end up depressed because we didn't deliver on the mission. Now, I don't actually agree with him. I've got an entirely different view on this. I'm actually pro the Bitcoin treasury.
So this is interesting because there is a lot of questions about these Bitcoin treasury companies. They're the hot commodity right now. But will they be in a few years? Will they be if companies keep taking out more and more debt, right? To me, it just seems like a big bubble that is going to burst. And because there's so much Bitcoin involved here, this is a huge risk to the rest of the crypto ecosystem completely. And there's also a lot of people who don't fully understand what is going on here, right? Because I want you guys to listen to what Jack Mallers is saying here about the new company that they're creating. Well, we're not going to play the full video, but effectively he says 21, which is the company that they're creating, expects to add 5,800 Bitcoin before the listing of their company on the stock market, increasing the holdings to 43,500. Will be the third largest Bitcoin treasury with a blended average cost of $87,000. Now, keep in mind, they actually bought those for $87,000, but these were done through private sales. It was literally Tether taking it from their wallet and transferring it to 21's wallet. And so this is a big offloading of Bitcoin from personal wallets into these large corporate wallets that remove a lot of the concern and the threat and the risk of holding the Bitcoin yourself. But he said at listing, each share is expected to represent about 12,559 Satoshis per share. Now, as we've covered, when these companies go from their pre-merge company to their post-merge company, sometimes there's a new issuance of a new stock. Everything that I've read from their SEC filings shows that it's going to be one-to-one conversion, which is good if that is actually the case, not financial advice. But when I'm doing the math right here, you can see that 12,559 Satoshis is about $14.78. And right now, the stock, SEP, Cantor Equity Partners, is $28. And so this is basically 2x what the actual NAV is, right? The net asset value. And so right now, before the merge even occurs, the company's already valued double what their underlying Bitcoin holdings are. And so we have a puff of air, right? Puff of air with MicroStrategy, puff of air here. And what is this going to do in a bear market? What is this going to do in a market rotation? Well, we may be in that market rotation right now, because now, as we discussed earlier in the video, everything is about productivity, what you can do with it. Are you going to build businesses? Are you going to stake the coins? Are you going to build DeFi products? Well, SharpLink, which is Joe Lubin's company from Consensus, he said that they're considering offering convertible notes with prudent leverage and risk management. And effectively, this would be copying the MicroStrategy money raise thesis. Let's listen to exactly what he says here.
So currently, we're not levered at all. We are considering offering convertibles, which will involve some leverage. And no matter what we do, we're going to keep leverage very much in check. We'll have a pretty low risk profile. We believe that decentralization is going to grow dramatically over time, and that will result in extreme appreciation of Ether and Bitcoin and some other tokens. And so the only thing that we need to do is to remain prudent with respect to risk levels, and our shareholders will benefit.
Well, we will see about that, but we are seeing a lot that's going on in these altcoins. And again, everybody's hoping that we're going to have like an official altcoin season, which I don't necessarily think that we are going to have. But this is the altcoin season. Like, this is the altcoin season. These Bitcoin treasury companies, this is where people are making the money right now. NASDAQ listed Vape stock, that's what the stock ticker name is, VAPE, surges 600% after 10x Capital and YZ Labs lead a $500 million offering to establish a BNB treasury. So now we have Dogecoin treasuries, we have BNB treasuries, Ethereum treasuries, Solana treasuries, but what is this actually doing for the ecosystem? Are they just copying what MicroStrategy, what their thesis is? I mean, look at this. It went from $8 all the way up to $60. It says it went up to $80. And now we're back down to $20, right? Which is still more than a double. And we don't know how many shares they're going to be issuing or all of that. I would definitely have to go and look at their SEC filings. But it doesn't matter. Like, this is where it's going. The companies are buying up the coins. The original owners still hold the coins, or they hold shares of the coins. and they're getting paid. So like there's all of these different mechanisms that are going on, and these are all off-chain transactions, off order book, off exchange transactions. And so it's making it look like the markets are pumping, but they're not really pumping, right? They're really not. And so how do we play this market? Do we buy vape? Do we buy BNB? Do we buy Ethereum? What do we do? It's a good question. And hopefully by the end of this video, we're going to figure that out. Right now, we're seeing Bitmine Immersion Technologies. This is Tom Lee's company announces a $1 billion stock buyback repurchase program. And so again, what they're going to do here is effectively protect the NAV, right? And so if the NAV goes under, the net asset value goes under 1, which in a downtrending market, in a bear market, it's possible to see that. We've seen it happen with Grayscale. We've seen it happen with other like ETF type products. I would imagine eventually we're going to see it with MicroStrategy and probably some of these other Bitcoin treasury companies. But what Bitmine is doing is they're preparing so that if the MNAV goes below 1, they can buy back their stock to bring it back up, to maintain at least that 1 MNAV. Because if it goes below it, it's really not good for the company and it's not good for the shareholders, et cetera, right? It creates a major imbalance. They don't care about the premium. They care about the opposite. And so that's something to keep in mind of what Bitmine is doing. Meanwhile, we have Ethereum treasury firm BTCS planning $2 billion raise to buy more crypto according to their new filings. And this filing created a little bit of concern in the community, so much that the CEO of BTCS responded in a tweet thread. And here's the deal. I really don't know how any of these companies are going to do in the medium or long term, right? I'm trading the market in front of us, not the market that I want. But again, I believe that we're towards the end of the cycle. So any investments now, they have to be very, very calculated and in and out, right? No long-term holds at this point. In the bear market, we can look for longer-term holds at much lower prices. But right now, we should be looking for easy entry, easy exit. And a lot of that is going to come from these companies that are not diluting their shares, that are not raising a lot of debt, or that are on par with their MNAV, right? Because especially in the Ethereum space, if they are on par with their MNAV, okay, meaning the MNAV is 1 or very close to 1, Ethereum is not even at all-time record highs. If we get to, let's say, 10,000 or even just 5,000, which would be an all-time record high, 5 or 10,000, maybe even 15,000, that would tell me that those stocks that are holding the Ethereum in their company, that there's a very high likelihood that those stocks are going to increase on par with Ethereum and potentially even more because of all of the volume that would be coming into those stocks. And so seeing BTCS raising even more money, this concerned a lot of people. So let's read through his tweet storm. This is Charles, the CEO of BTCS. He said BTCS just filed 2 SEC filings as the largest shareholder. He said, I want to clarify what this means and what it doesn't mean. Too long didn't read is this is about flexibility, not dilution. Because if they're going to be issuing more shares on the market, they're diluting your shares, right? This is what MicroStrategy has done. Keep issuing more shares, selling more shares on the market. It's flooding the space. Now they're buying the Bitcoin on the other end of that, but they're doing it in an uptrending bull market. What happens as we enter a bear market, right? I would imagine the opposite. Now this is Ethereum, so it's a little bit different. He said the first filing they did covers shares underlying the recent $17 million convertible notes and warrants. He said this will allow BTCS to issue prepayment notices if the stock does well, a strategic tool, not a trigger for dilution. Effectively, if the price goes up enough, they can convert the debt into shares, and then they don't have the debt anymore. Very different than what Michael Saylor did, I believe. I could be wrong on that. But anyway, he said, if we hit a strong price, we can deliver prepay notices on those convertible notes, and the investors would likely convert and exit the position. We'd clear debt using registered shares, no new cash outlay. This gives us an option to clean the cap table if the conditions are right. Now, Short term, it's well, really long term, it's very smart because they pay off the debt now. They don't have to worry about it later. And then all of the Ethereum that they have is essentially theirs without any debt underlying. Now, for the shareholders, there may be a short period of time where there is dilution because of these shares being issued and people exiting those positions. But longer term, again, think about the next cycle. That's what we have to start thinking about, right? The next bull market. He said the warrants are now cash exercise only. That means no more cashless exercising of these warrants. Warrants are like a derivative to promise a share in the future. If investors want to exercise, they got to write a check and take on the market risk, just like everyone else. He continues and says, this change minimizes dilution. It brings cash into BTCS and puts warrant holders on the same footing as long-term shareholders. They now risk their own money to exercise those warrants, not just math games with picking the highest bid prices. He continues and says their second filing was a $2 billion shelf registration. The number sounds big, but shelves equal flexibility. He said we had a $100 million shelf at the market, meaning they could sell shares in the market for 3 years and only used 18% over that 3-year period, or $17 million. He said the current $250 million shelf still has about $105 million left. This is just long-term planning, not a dilution roadmap. And so again, this is a shelf. They're allowing themselves to put shares on the open market to raise money if they need to. Now they're saying the current $250 million shelf still has $105 million left, meaning they already used $150 million of it. Interesting. He continues saying, we raised $30 million at $7.90 a few weeks ago when BTCS first pumped, right? The stock dropped to $5 the following week, and people blamed BTCS for dumping ATM. But that's flat wrong. He said we barely touched it. It was only one trade for $1.6 million at $6.04. No flood of new shares. Well, that is a flood of new shares, but he's saying it's minimal, and I would agree. And here's the deal. I don't think that there's anything wrong with the company in these moments of major pumps going in and taking advantage of that pump the same way that you would, right? Because remember, with most of these companies, right, we saw SharpLink did this, and BitMine Immersion Technologies did this as well. When they make the announcement about their treasury, look at the stock. It goes from $2 all the way up to $80. Why would they not take advantage of that, even in a small percentage? And granted, the price does come down. We saw that with SharpLink, we saw that with BitMine, and we saw that with BTCS. But if they're trying to raise money and the market is putting money in, and they can go in the market and sell some, right, at these higher prices, because even $5 is higher than where we were a few weeks ago. So when you see these major pumps, you should not be buying into them. You should be buying before the major pumps, not in the major pumps, right? We sell the rip and buy the dip, because during the rip, there's money to be had. Granted, it may push the price down a little bit, but it's still higher than where it was pre the announcement, right? So this is something very interesting to look at with what he's saying here, because what he's saying is very different than what Michael Saylor's saying. Remember, Michael Saylor sold all his shares in MicroStrategy in 23 to 2024. Now he has more because they unlocked some more part of his pay package and all of that. But effectively, they're selling MicroStrategy stock, as we explained. Charles Allen holds BTCS. He's the largest holder and the CEO. So he said, what happened? Occam's razor. Around 90% of shareholders hold shares at Schwab. If they have margin accounts, Schwab can and will lend those shares to short sellers. He said, you might be unknowingly helping them short your own investment. And by the way, it's not just Charles Schwab. It's all the major brokerages. You can lend your shares out to somebody who's shorting it and they're borrowing it. He said, this kind of market structure causes real selling pressure. It's a more likely that the stock drop than anything that they did by selling shares. He said, we're aligned with shareholders. He said, he's one of you, and I do not support diluting at depressed values, but diluting at non-depressed values. should be okay, right? So that is basically what he is talking about here. I don't know whether I'm bullish or bearish on these Ethereum strategy companies. I think medium term, it's going to be very bullish once Ethereum price starts moving. But because everybody understands how these companies are acquiring Ethereum through these private sales, not on the open market, and they're issuing a lot of debt. These are the BTCS SEC filings that explain how much they're going to be putting into the market, how many shares they're adding to the open market. I mean, there is a lot of risk there. But again, if Ethereum moves higher, precipitously higher, towards the end stages of this cycle, this could be a huge win if you realize your gain. Most people won't, because they're going to say, but Cryptoviser, it's going higher. I can't sell right now. Meanwhile, we're literally in the FOMO stage, right? I show this chart of the market psychology all the time, and people are like, no, Cryptoviser, we're in the optimism phase. We haven't even started the bull run. It's like, what? Where the fuck have you been for the past 2 years? The market has gone incredibly higher. It may have come back down, but just because your coins didn't go up to what you wanted and sell doesn't mean we're not in a bull market. We are. But now we have the billionaires saying there's a very small window to buy digital art, aka NFTs, from an established and newly established respected artist at reasonable prices. A very small window. Consider this a warning. Guys, we are literally at the end stages of the bull market, and you have billionaires telling you, buy NFTs right now before it's about to be over. You're not going to have a window to buy it. You have to buy right now. FOMO, FOMO, FOMO. That is an indicator. Probably one of the biggest red flags, because there are a lot of people who are going to listen to Raoul Pal and go buy NFTs. And who do you think they're buying it from? Probably a billionaire. Anyway, I pulled up GameSquare, because GameSquare is another Ethereum treasury company. They're planning on purchasing quite a bit of Ethereum. The price has also done a round trip. It's pretty interesting what's going on here with GameSquare. But they bought an NFT, and it kind of rubbed a few people the wrong way. But anyway, they did some type of investor strategy call at the end of July. And I pulled up the actual document that they submitted. And I thought I was looking at the wrong company. But effectively, they're looking to do multiple types of DeFi yielding through USD, Ethereum, and Bitcoin with compounding interest. And you can see here, they're looking at USD yields, market neutral, high yield enhanced by systematic risk frameworks and automation, 15 to 25% a year. They're talking about Ethereum staking, 3 to 5%, and then Bitcoin yields, 4 to 7%. But as I was reading through this, I'm like, this kind of looks kind of scammy, to be honest. It may work out, but I read through this and I'm like, what does this all mean? Now, this could be really good for BTCS because they're working on this very complex way to utilize their Ethereum. But again, they're trying to build stuff. This is very different than what we're seeing with the Bitcoin treasury companies. So there is potential here that these companies that are doing things like this and working with these other teams and providers for different services within the Ethereum ecosystem, this could be really, really big for BTCS or any of the Ethereum treasury companies. But it could also be just a lot of jibber jab talk, similar to MicroStrategy, right? Their strategy is to acquire Bitcoin, but we don't know anything else about their strategy. Right now, they have a lot of debt products, a lot of dilutable shares, a very high MNAV, and all they do is hold an asset. That's all they do. They just hold an asset. They don't do anything with it. Maybe in the future they will, but right now they're not, that we know about. And this is a risk, not just to MicroStrategy, but to the entire cryptocurrency market as we are reaching all-time record highs, and people believe the bull market has not even started. That's kind of where we are. And so in my view, the Bitcoin breakdown has begun, and now we're starting to see movement into other cryptos following the Bitcoin thesis. And once you start to see these copycats pulling up just to raise money and little, pet stores that sell, hamster food, buying Bitcoin on their balance sheet and announcing it like it's the most incredible thing that ever occurred on Earth. These are huge red flags. And personally, I'm turning bearish, right? I'm more bearish than I am bullish, because at some point you have to look at the market and say, we are topping out. Whether we're at the top or we're going to go higher, it doesn't matter. Like, we're in a very, very close range of topping out in the market. And the market sentiment is in complacency. And this is not a good place to be, especially fully deployed in the market, because what happens in the next phase? Straight down. Hopefully you guys enjoyed this video. Let me know what you guys think down below in the comments of the video. Don't forget to give the video a thumbs up. Hit that subscribe button. That way you never miss a new video. And I'll see you on the next episode of the Cryptoviser podcast. Crypto on.